Hello students and hello everyone. This is Teacher Angel and welcome back to our Accounting Online video lessons. For today, we will continue our lesson on the accounting for bonds. This time, we will focus on the accounting for serial bonds. As a recap, in the previous video lesson that we talked about the accounting for the term bonds. So the term bonds are those bonds which have a one date or one time maturity. So the principal will be paid on the maturity date. While serial bonds, which is the highlight of this lesson, refers to bonds that have staggered or installment principal payments. So this means that the principal are to be paid in several intervals depending on the term of the bonds. So for example, if the bonds are to be paid within 3 years and are paid annually, so therefore, there are 3 installment payments of the principal. Just like the term bonds, the principal payments or the intervals or the regularities of the frequency in the payment of principal does not necessarily coincide with the frequency of payments with regards to the interest. So, pwede na dili sila pareho. Just like in the term bonds, so even if the principal payment will be paid on the maturity date, so pwede nga ang interest will be on a regular basis or in regular intervals. Pwede man pod ang interest is lump sum pod. So going back to the serial bonds, so na ay regular intervals in terms of the payment of the interest. So to illustrate how the serial bonds are being accounted for, let us use this problem in the book. So we have issuance on interest date of serial bonds. Biliran Corporation issued bonds with face value of 6 million on January 1, 2021. The nominal rate is 6%, payable annually on December 31. The bonds are issued with an 8% effective yield and it matures every December 31 each year at the rate of 2 million for 3 years, which is sakto because if it is 6 million and 2 million ang regular payments niya, so 6 million divided by 2 million, that would mean 3 times magbayad. So that's 3 years. So you have the requirements. Compute the issue price of the serial bonds, and then compute the interest expense in 2021, and compute the carrying value of the bonds on December 31, 2021. By the way, the regular intervals is not only for annual nga periods. Pwede po siya nga monthly, pwede po siya nga semi-annually or quarterly. So, depende na siya sa term sa bond. So, kung moingon sa problem, 6 million unya payable siya semi-annually. So, therefore, twice a year po ta magbayad. So, 6 million unya semi-annual for 3 years. So, therefore, 3 years unya times 2. So, na ay 6 periods. So, 6 million divided by 6 periods. So, tag 1 million siya kada semi-annual. So, depende yun siya kung unsay lahang agreement as to the payment. So now let's go to the requirement. Compute the issue price of the bonds. If you can recall in the term bonds, diba, mag-compute the sa present value of the principal payment and also the present value of the interest payment. So same lang po siya gihapon if we are computing for serial bonds. The only difference is that in the principal payment of serial bonds, the principal amount na we will place here is not the entire face amount. Diba? Kung term bonds, kung pilay whole or lump sum amount nga ma-due at maturity date, mausad ang gibutang diri. But since this is a serial bond, so the amount that we're going to place here is the regular payments of the principal. So based sa problem, 2 million siya every payment. So 2 million ibutang diri. Remember that the present value factors that will be used or that will be multiplied depend on the iyahang term payments or ang payment intervals niya or the kung lump sum ba siya or installment. Remember that we use the present value of 1 if it is a one-time payment or lump sum payment. And present value of ordinary annuity of 1 if it is installments. So since ang atong principal here is installments siya, so magamit ang present value of ordinary annuity, that's why the factor here is 2.5771. So if you're going to check that using the calculator nga computation, so you will arrive at this factor. So you will get 5,154,200. Let's go to the present value of the interest payment. So if you can recall sa term bonds, kasi ara siya, one line lang ang pag-compute, diba? So principal times the nominal rate, then times the present value of ordinary annuity. Kaya uniform man ang payment sa interest adto. Uniform in the sense nga pari-parihas ang interest payments every year because the principal is the same. Wala man nakuan or wala man na change ang principal adto kay ang whole principal will be paid at maturity date. But this time, kung serial bonds siya, diba, every year na ay principal payment. So, ang outstanding face value of the bonds will be reduced by the regular payments. So, after year 1, na anay mapay nga 2 million, so makuhaan ang 6 million nga principal by 2 million. So, makuhaan siya og 2 million. So, mahimo na lang siyang 4 million. So, after year 2 na sad, magbayad na sa 2 million. So, mahimo na lang siyang 4 million. And then, finally, ang last balance would be 2 million. Multiply it by the nominal rate. So, nominal rate, yun siya. And multiply it by the present value of 1 factor. Nga naman nga present value of 1 man siya, ma'am, nga naa may regular payment. So gamiton na ni siya ning present value of ordinary annuity for installments, correct? For regular payments, pero dapat uniform. So uniform installments. Usa nang pasabot sa uniform, pari-parihas og amount. Mao bitaw ni siya nga present value of ordinary annuity ang gamit kay uniform payments of 2 million each year. Kani, na regular payments pero dili man pari-parihas ang amount kay 6 million times 6% is 360 and then this one 4 million times 6% is 240. So dili sila pari-parihas. So gamiton nimo ang present value of 1. This is for lump sum. So, one-time payment. One-time payment of 360, one-time payment of 240, one-time payment of 120,000. So, just multiply the factors. You will get these amounts. Then, sum up. You will get now the issue price of 5,788,532. So, this is your issue price. To compute the interest expense, so let's prepare the table. So there are 3 periods, kay 3 years man siya niya annual. So 3 dates po ni siya. So 21, 22, 23. By the way, how do I know, ma'am, kung saan nga date akong ibutang diri? Usually, mag-agad yun na siya sa interest dates. Okay, kapila man magbayad sa interest. So, di ba, if you can recall in the previous lesson that we had, katong interest ng semi-annual, so, semi-annual po ang date. So, ang interest payments ani is annual man, so annual po ni siya. So, di ba, this is the issue price. We multiply it by the effective rate. So, ang effective rate here, or the effective yield here is 8%. Okay, so 8% ang gamiton. And kani siya, 6% kani siya. 6%, yun sa man siya pagkuha. We will compute that later on. So kani sa 5 million. 788,532 5,788,532 times 8%. So you will get 463,083. How do you get this one? So the total payment here is for the principal plus the interest. 'Di ba every year magbayad og, 'di ba sa 2021, 'di ba every year magbayad og 2 million plus tong interest kani siya kani, 'di ba this is 360. Okay, so 2,360,000. For 2022, so na 2 million again plus 4 million times 6%, that's 240,000. So 2,240,000. And for 2023, that's 2 million plus 2 million times 6%, so 120,000. So 2,120,000. So mani siya ang total payment. What you're going to do is you get the difference. So 2,360,000 minus 463,083. So 1,896,917. So what will be the treatment of this one? So 5,788,532. Okay, minus 1,896,917. Okay. So that would be the adjustment or the adjustment to your principal. Okay. So you have 3,891,615. Next, 3,891,615 times 8% again. So you have 311,329. And then again, get the difference. And this one will be added here. So, deducted from here. Deducted from here. So 3,891,615 minus 1,928,671. So that's 1,962,944. Since mauna ni siya ang last payment for next year, so bring down na siya. And then, adjust na lang, kuha ang difference, and you will get 157,035. Okay? What is the interest expense in 2021? This will be the answer. Okay? Kanimang gong 360, unsa din ang 360, ma'am? Interest gihapon siya, but that is interest payment. If you're going to get the interest expense, it should include the interest plus the amortization. So, if we are asked how much is the interest expense in 2022, so maupod ni answer 311,329. What is the carrying value of the bonds in 2021? The answer would be 3,891,615. If you're asked how much is the carrying amount of the bonds in 2022, that would be 1,962,944. Okay. So there's also an alternative computation to get the present value of the bonds. So kung dili ta ganahan ani, pwede sad this way. So unsaon man siya. The same kaniha to akong gi-compute, you get the principal payments and the interest for each year, and you multiply it by the present value factor. Actually, this is the shortcut. Mas shortcut ni siya. So, kani nga factor diri present value of one tanan para dili na ka mag-compute og present value of ordinary annuity, di ba? Nga separately. So, pwede ra pod nga present value of one, largo na siya. Anyway, kani mang good gibahin siya 2 million unya katong 360 ani, 2 million unya ang 240 ani, 2 million unya ang 120 ani, di ba? So, mao ra man gihapon. So multiply, so you will get 5,788,332. So this would be convenient and faster in terms of the computation. And anyway, you will still arrive with the same issue price. To record the issuance of the bonds, debit cash, unahon na to tong consideration, and credit bonds payable, 6 million. Balancing figures is on the debit side, that's the discount on bonds payable, 211,468. To record the interest payment, interest expense, then credit to cash. So that's 6 million. Okay, hindi ni siya. This is, okay, wrong ni siya. 6 million times, okay, 6%. Okay, 6 million times 6%. So that's 360,000. To record the payment of the first installment, so debit bonds payable, 2 million, and credit cash. Then, to record the discount amortization, so yun sa man siya pag-compute ng discount amortization ano niya. So, that would be, okay. Hello students and hello everyone, this is teacher. So, you have to get the amortization of the discount. So, how do we get this 103,083? So, let's go to the table here, diba? So, this is our interest expense. And remember, ang interest nato, interest payment nato for the year is 360. So, therefore, diba, interest payment and your interest expense. So, kaunin mo ang difference, 360 and then 463,083. So, get the difference, that's 103,083. Okay, mauna siya tong amortization. Same goes here, 240 minus 311,329. And the answer would be the amortization, 311,329 minus 240. That's 71,329. And finally, 120 and 157,035. So that's 120 minus 157. That's 37,035. Okay? So, nga naan siya pagkuha. So, again, mani siya tong 360 and katong interest expense. Okay, kung imuhan ni siyang totalon, diba, mauni na sa table, 463,083. Diba? Mauni siya tong nasa table for the interest expense. Yan na, 463,083. How to present this in the financial statement. So, in your SFP, you have the current liability section, the current portion, 1,928,671. So, let's go to the table. Asa man na siya gikan? Okay. So, this is the current portion, 1,928,671. Money siya ang mature next year. Okay, after 2021. And this one, this is the current. And this is the non-current liability. Okay? So, non-current liability. Then, in your statement of comprehensive income, your interest expense is the amount in the table, 463,083. In your notes, you have to present your bonds at 4 million minus the discount on bonds payable. That is 108,385. Pila man tong original? 211. Okay, 211,468 minus katong na-amortize na 103,83. So, 211,468 minus 103,083. So, 108,385. And get the difference. This is your carrying amount, 389,1615, which is katong kani mo ni siya carrying amount. Okay, another example, issuance of bonds between interest dates. So, kang ganiha, it's on interest date, meaning kung kanus ang interest date maupod ang date nga nabaligi ang bonds. Kani siya is wala siya motunong ang date sa pag-issue sa interest payment dates. So for example, on March 1, 2021, Summer Company issued a 12% 5-year 1 million at 98 including accrued interest. So sa one sentence nato or sa first sentence nato, naghan kayo og details. Okay, March 1 is our issuance date. Okay, so man siya issuance date or issue date. Okay, and this is our nominal rate. This is the face amount. And this is your quotation. Okay, tagpila siya. So basically, this will help us get the fair value of the bonds. And ang 98, apil na ang accrued interest. So the bonds are dated January 1, 2021. In addition, interest on these dates are due annually on December 31, 2021. What is the initial carrying amount of the bonds on March 1? So when the bonds are issued between interest dates, the total proceeds from the issuance is composed of the two. So ang proceeds daw is the consideration, okay, that's number 1, amount received, and the interest received, which had accrued from interest date to issuance date. So may interest date dire, December 31 up to issuance date. So December 31, 2021. Prior year man, 2022 March 2021. But since the bonds are dated on January 1, so January 1 ato ang gamiton. Okay, kay mao man yung start niya, dili man siya December 31. Okay, actually that's a year after the interest date. So January 1, 2021. So now let's go to the computation. So in the given data, the bonds are issued at 98%. This is a quotation, so we will use that as our proceeds. So 98% times 1 million is 980,000. We compute the accrued interest. Okay, so that's 1 million times 12% times 2 over 12. So anong 2 over 12 man ni siya? Okay, balik ta. Diba? Accrued from interest date to issuance date. Kano sa man ang interest dates? That's every December 31 up to issuance date. Kano sa ang issuance date? That's March 1. So since the issue date is January 1, so anita manukad, diba? Pero basically, 1 day ahead man tong interest date. So, any date ang atong sugdan, diba? Or atong start date, padira. So the fact is, the interest date is December 31, so going to March 1, so that's entire January and then entire February. So how many months are there from January to February? January to March, sorry. January to March 1, that's 2 months. So that's why the amount here, let's go back to the data. Okay, 1 million times 12% times 2 over 12 because the interest is on a yearly basis. So that's 20,000. So the proceeds here again is inclusive of the accrued interest. Okay. So we have to take it out, the accrued interest. So that's 960,000 only. The interest, the proceeds that's applicable for the bonds because the 20,000 is applicable to the interest. So entry would be cash, 980,000. Credit bonds payable at face amount, then credit interest expense. Okay, for the accrued interest. Actually, you can use accrued interest payable. So, pwede niya siya accrued interest payable or interest payable, whichever is more convenient. Pero, magdepende siya kung unsay gigamit nimo pag issue unsay gigamit imong account pag-issue kay inig reversing ana niya kinahanglan pud ka mag-agad sa unsay gigamit nimo pagniagi. Okay? And then the balancing figure, okay, kay 1,020,000 man ni siya. So ang balancing figure na diri sa debit so 40,000 discount on bonds payable. Nga discount man siya kay lesser man yung amount kaysa sa face amount, diba? Ang iyang proceeds. So what would be the entries? Okay, to record the interest payment on December 31, timudaga naman siya og 1 year. So mag-debit kag interest expense, credit, cash. Okay? Samante akong gingon ganiha nga mag-agad ang imuhang entry sunod depende sa unsa gigamit imong account pag-issue. So kung interest expense ang gigamit pag-issue ngani ang entry. So i-debit nimo ang interest expense 120. So that's 1 million times 12%. In effect, 'di ba? This is recorded on March 1, 'di ba? March 1. So, in effect, na may credit nga 20,000 o niya gi-debit ang 120. So, ang ending, 100,000 ang interest expense. Which is correct. Kay ang interest na to dapat mudagan ra from March 1 until December 31. Katurang na-expire na gamit. Wala, dili man kita ang nangutang from January to March 1. Wala man ta nangutang adto. Nangutang ta from March 1 until maturity date. So, kaya may cut-off ta, kaya kinahanglan ta mo report on December 31, so kutob, December 31 ang counting. So, in effect, ani nga entry, 100,000 ato ang interest expense. And of course, credit cash kay mo bayad man ta. What if ang gigamit kay interest payable? So, kani po nimong entry, close the interest payable and credit cash for the amount, total amount of interest, and debit interest expense 100,000. Okay? So, 100,000 lang. Okay? This is the balancing figure. Sabing, ang balance ni siya, 120 minus 20. To record the amortization, this would be using, yun sa manin siya pagkuha. This is 40,000 straight line na niya. 40,000 divided by 5 years. Okay, 5 years man tong term ato. 40,000 divided by 5 times 10 over 12. Ganun 10 over 12 man ni siya. That's from March 1. Kanus alang ta nagsugod sa pagpangutang until December 31. Okay. So, how much now is the discount on bonds payable balance? Pila na may nahabilin. Okay, sakto ba siya? 40,000. 120 ba siya? Okay, 40,000 divided by 5 times 10 over 12. So, nanubra ng amount ani. So, this is, okay, pila ka years ni siya? Sakto ba? 5. Okay, 5 year. Okay, so 40,000 ang discount. 40,000 divided by 5. So, that's 8,000 a year times 10 divided by 12. So, dapat 6,000 ni siya. Nubra ra ni. 6,667. Okay. So, how much now is the balance of your discount on months payable? So, that's 40,000 minus 6,667. So, that's how much? 33,333. This is your balance on the discount on months payable at the end of 2021. Okay, now let's go to another illustration, still on the issuance of bonds in between interest dates. Okay. Is this in between? Okay. So you have issuance of term bonds. So term bonds again, lump sum payment of principal or one-time payment of principal. On January 1, 2021, Leyte Company is planning to issue a 12% 5-year 1 million bonds. Interests on these bonds are due annually every year and Leyte determines that the current market rate on January 1 is 15%. Compute the amount of proceeds received from the issuance, assuming bonds were issued on the following dates. January 1, 2021, same date of the issuance, and then March 1. So if the bonds were issued on January 1, present value of the principal, which is 1 million, kay ang principal kay 5-year bonds man siya, ang interest are due annually. So, present value of 1 ang gamiton. Ang sa interest, so kay lump sum man siya, so 1 million pod gihapon ang gamiton times, sakto ba? 12% times 3.3522. So, i-check na to kay basig. Dili na po mao. So, we have 15% man ang effective rate. Okay, effective rate is 15. And then, nominal rate is 12. 1.15. Okay, 1, 2, 3. Okay, 4, 5. So, 4.49717. Okay, correct. Minus 1 divided by 0.15. So, 3.35215. Okay, correct. 3.3522. So, 1 million times 0.4972. That's 497,200. 1 million times 12% times 3.3522. That's 402,264. Okay. Correct. 899,464. So, correct ni siya. What will be the proceeds from issuance between interest dates? Okay. We can simply compute for the carrying amount on the issue date assuming the bonds were issued at interest date. Okay. What if the March 1? Okay. Kaning ganiha, kaning example here, naa siya'y quotation, 'di ba? Kani nga problem walay quotation. So compute na to ang iyahang present value. So na naman tay present value nga gi-compute ganiha 899,464. But this one is the carrying value kung gipalit kung gi-issue ang bonds exactly on January 1. But since the bonds were issued not on January 1 but March 1 based on letter B or requirement 2, the requirement 2, so kinahanglan natong kwaon ang carrying value starting March 1, 2021. Okay? So how do we compute? So kwaon nato ang portion sa amortization good for the period covered. So sa aman siya. So it's a carrying amount on January 1. That's 899,464. Compute the amortization from January until March. So, di ba, gi-compute naman ni siya as if as if January 1 gid siya na issue. So, mao ni siyang amortization. So, kung ano yung fraction good for 2 months. So, 14,920 times 2 over 12. So, that's 2,487. So, i-add siya. This is the carrying amount of the bonds on carrying amount of the bonds on March 1, 2021. Okay, then i-include nato ang accrued interest para makaibaw ta pila may issuance or pila may na-receive nato from the issuance of the bonds. That's 1 million times 12% times 2 over 12. Good for 2 months. So you have 921,951. Alternatively, the proceeds applicable to bonds may be computed as if the bond was issued on interest date and was amortized for 2 months up to March 1, 2021. So, ano siya? 899,464. Okay? And then, kuhaan mo, 899,464 times 15% times 2 over 12. So, 22,487. Kani siya, yun na siya pagkuha, 899,464 times 15% times 2 over 12. Unya kanipod, 1 million times 12%, sakto ba? Times 2 over 12. Times 12% times 2 over 12. Nakuha mo ang difference. So, you will get 2,487. So, i-add 901,951. Okay. So, that's how you're going to get the issue price or the proceeds when the bonds are issued in between interest dates.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching!